Right, let's get started. If you've watched my other videos, you will know that at the time of filming this video, the annual allowance is £60,000. Previously, it was £40,000. The annual allowance is how much you can pay into your pension each year without a tax charge applying. Both personal and company contributions are included. So what is the tapered annual allowance? The tapered annual allowance is a reduction in the annual allowance for higher earners, specifically, or should I say potentially, those people who have income over £200,000. So if that's you, it could reduce your annual allowance from £60,000 right down to as little as £10,000. As I said before, the tapered annual allowance is tricky because it's not straightforward, so bear with me whilst I try to explain. And in case I forget, if you think it might apply to you, I really recommend that you talk to your accountant or advisor. Because if you pay more than your allowance, even by mistake, you'll end up with a tax bill. So to work out whether this might affect you, I'm going to walk you through a few simple steps. First, we need to look at something called your threshold income. In very simple terms, it's all about your taxable income, excluding your pension contributions. So remember, this will include your salary, your dividends, any taxable benefits, any rental income if you own any properties, and even investment bond gains if realised. If your threshold income is less than £200,000 in this tax year, you're below the limit and tapering doesn't apply. But if your total is £200,000 or more, you need to go to the next step, which is to work out your adjusted income. Adjusted income is your total income, but this time you have to add back in any personal and any company pension contributions. If the total with the contributions is more than £260,000, your annual allowance will be tapered. So how does the tapering work? Well, for every £2 of adjusted income over £260,000, you will lose £1 of your annual allowance. But the good news is that your annual allowance won't go below £10,000. So once your adjusted income is more than £360,000, there's no further reduction. So let's take a quick look at an example. Peter is a business owner and his combined salary and dividends total £210,000. So that's his threshold income. He's trying to grow his pension fund by using cash in his company, so he wants to pay a pension contribution of £60,000. If he does, that will mean his adjusted income is £270,000, i.e. £210,000 plus £60,000. So that puts him £10,000 over the adjusted limit of £260,000, which means that his annual allowance will be reduced by £5,000. Remember, you lose £1 for every £2. So Peter's tapered annual allowance would be £55,000, not the £60,000 he's planning on paying. So you can see that if you're a business owner in control of how much income you pay yourself, and you want to maximise company pension contributions, you might want to make sure that you work out the numbers ahead of time. But what if you've already paid more? Worst case is you'll pay tax on the excess pension contribution. But you might be able to use the carry forward rules, and if the tax is still payable, perhaps you can use the scheme pays rules to have the tax paid from your pension fund rather than have to pay it out of your personal bank account. I'll cover both of those in future videos. If you're still here, well done and thanks for watching. Let me know if you have any questions or topics you'd like me to cover, and I'll see you next time. Give this video a thumbs up if you like it and hit the subscribe button. I'll see you next time.